Hello, Big Trends traders. This is Price Headley. Wanting to give you a product review of our after hours trader program. I get a lot of feedback from folks who say, I can't sit around and watch the market during the day all day. I've got a day job. I've got other things I want to do. And said, look, let's empower folks to be able to place these trades outside of market hours so you can be ready to trade the next day. So you get that evening or into the morning before the Wall Street Open at 9:30. Whatever suits your schedule, you can basically shift to take advantage of placing these trades, to take advantage of them week over week. Now, just a reminder, everything I share with you here is for your information and education only. Nothing that we talk about here should be considered a specific recommendation of buy or sell any particular investment. Of course, you know that you are solely responsible for your own investment decisions. Big Trends and its staff are not responsible for trades you choose to make, and not all Big Trends products and services are appropriate for all types of investors. Always keep your risk level in mind. We send out our after-hours trades through real-time email updates and text alerts to your smartphone, typically after the close on Mondays with follow-ups as needed through the week. And we try to do that outside of market hours just to allow you to manage your stops targets accordingly. Consult your tax advisor before you make any investment that affects your unique tax situation. This is all about getting you more focus on the best opportunities in the market, bull and bear. So we like to have one bull call trade, simple call option purchase, and a put option purchase each and every week to kick off the week after we get the Monday action behind us. So we'll send these out to you by 6 p.m. on Monday evenings, Wall Street time. I'm going to share with you my top 3 after-hours indicators. This is basically a set it and forget it methodology, although we never forget it. We always keep you aware of what you need to do to get in and out, and this fits for your schedule, whether you place the trades that evening or the next morning before the market opens. Share with you some bonus with the CCI indicator and find the power surges up and down in the markets. Why should you care about this? Since we put the strategy into effect, you can see $2,500 plus in gross profits over the course of the prior 9 months. You can see that, again, past performance is not a guarantee of future results. Call us at 800 Big Trends if you want to get an updated track record as you watch this over time. But you can see that, the goal is smaller losses and bigger gains, So you can see that while we've had some small loss months, we've had some really nice winning months. And the goal is that's where you're going to stack up your profits when you find some good trends that you can let run. So we're going to walk you through that. Of course, past performance doesn't guarantee future results. First one to look at would be acceleration bands, one of my top 3 indicators. It's basically how I founded BigTrends.com, finding the fast-moving stocks on the upside in particular, and then adapted it to use it on the downside too. Learning the lesson when I started trading in 1990 is the best stocks never come back to test those same major moving averages. By the time they do, the trend's probably over. You want to catch up all the trends just accelerating. We combine volatility and trends. And it hit me when I read the book Soros on Soros by George Soros, where he said it was the unexpected moves where he made the most money. These are called the fat tails of the distribution, the ones that aren't expected. And so we're trading those ones that shouldn't be happening, essentially. And the fact that they are tells you that there's some significant buying, or in this case, selling pressure. This was in Caterpillar puts, so we bought the 148 strike puts. When the stock was trading around 143 to 143 and a half. So we're buying those options for $665, 6.65 to control 100 shares. So one contract costs you $665. Even if you only get one contract, you can see there a couple of days later we're making 42 and change percent for just a couple of days work, catching a piece of this downtrend. Do we catch it all? No, but we caught a part of it, said thanks very much. And we usually like to see those kind of objectives around a 40% gain versus about a 20% stop as our typical goal. We add in other indicators like Larry Williams' percent range or percent R indicator, similar in concept to an RSI or a CCI. We'll talk about CCI in a minute as a third leg of our stool. But we want to find things that are overbought and staying overbought for the upside, or find oversold that's headed even lower. And the philosophically, our trading philosophy of Big Trends is the strongest trends will tend to stay strong longer than you and I would expect, as long as that keeps having the right profile. Same way the institutions are dumping a stock, those weak trends are going to stay weak. So you look at a situation here where, like Larry Williams was using a 0 to minus 100 scale. I like the 0 to plus 100 grade school scale, but the principles are still the same. We want the top 20% in the 80% plus range. Prefer A or A plus stocks in the 95+% range, means they're right near the top of their range. Isn't that a bad time to buy a stock? Not if it's trending to the upside. So same way in the oversold, bottom 20%, that usually shows you institutional dumping. So the philosophy here is that stocks will tend to remain overbought or oversold longer than expected, and you can trade them accordingly. So like when you see a case with percent R, in this case, interestingly enough, we traded this with an acceleration band and a CCI in yellow confirmation. So all three of the indicators were bull confirmed once we closed over that level. We got the two closes over the acceleration band and caught this next run right through here. So we didn't catch the beginning of the trend. But interestingly enough, if you just use percent R, we like other filters to kind of give us a higher confidence level. But percent R went overbought on ConocoPhillips way back here, and a couple days later it closed just above that level. And we were concerned that the acceleration bands were kind of overhead as some resistance in purple. Got our big trends band showing in the royal blue lines on the top. That shows you when it's outside of that upper boundary, it's basically in the top 20% of its readings. Oh, by the way, Conoco stayed above there through for most of May and all of April. And so, you can take advantage of that with what we call the retest method even as well, these buy the dip opportunities as long as it holds that support. It's kind of like an escalator riding it up there, got closer to retest, and it was a retest intraday here on the right side of the chart too. So we'll teach you about not just breakouts, but also how to re-enter trends on the way up. And then let's talk about CCI, which is the Commodity Channel Index, which you see took a little bit longer to kick in. Here it was only the second half of this chart. But that's where you're getting the really high consistency with the above the acceleration bands, percent R and CCI together. That's all three legs of the stool. When we highlighted in yellow there, that's like, hey, that's all systems go. And that next week was a really good week to trade COP, ConocoPhillips. The Commodity Channel Index sounds like it's just for the futures markets, but the CCI, I've shown it to work for a lot of big name stocks that trend on the way up and the way down. Same philosophy that overbought's not bad if it keeps going overbought, keeps on going up. The institutions want a piece of it. It's going to keep helping push that higher. And oversold can be very bearish if they want to dump a stock that they don't want any part of. Here's a case of some dumping going on in Philip Morris PM. You can see there's a setup when the yellow CCI line goes below its oversold threshold of minus 100. CCI is a little unique because it's factoring the high plus the low plus the close divided by 3 each day. So it's not just looking at the close, it's factoring in the high and the low a lot more effectively than most other indicators. So by the time we're breaking down there, that next day's close, we're saying that's a bear confirmation on CCI. So we're saying get a piece of that there. You can see as we caught it right off of the open and then it started to drop. Next day consolidated. Next day gave us the exit there. To go ahead and say, let's take advantage of that and make a 51% gain and change. Bottom at 540. So we're turning that into more than a $7 option, like roughly around 720. So you can see that at that point, we're saying thanks very much. Now, by the way, this is an in-the-money option where basically we're buying a 104 put when the stock's trading in the neighborhood of about 100, maybe 99.5. We're not paying a lot of excess time premium here. So, most of this is what we call intrinsic value-based trading, a stock substitute or surrogate approach where we're essentially, why buy the stock when we can lease it with an in-the-money option? We find that quick hit, especially on the downside, we get all those components coming together, can get us a nice quick profit. And we tend to take the money and run. We'll typically hold these no more than a week. So this is an ideal swing trade horizon. As a after hours trader subscriber, we get 2 new trades every week. Like I said, typically after the close on Monday, about 6 p.m. Wall Street time. Then you've got from 6 p.m. To that next morning at 9:30 a.m. Anytime that night or the next morning to get in and get your order working outside of market hours. We call it after hours, but essentially we're trying to get ready to trade the next trading day and trading days beyond. So this is not day trading per se. We're much more interested in swing trading over the next week or so. You can see here that our basic strategy guidelines are 1 to no more than 2 weeks held. So if we sent out 2 trades a week and we did hold both of those over into the next week, then you could have 4 trades open at once, but typically no more than 3 and usually 2. And that means 2 trades a week, 8 trades a month on average. So in the course of a year, you're getting 96 trades plus almost 100 trades a year essentially as part of this longer term package when you buy that. The options prices can range between about $3 up to about $8, with the average being around $5 per contract. That's about $500 to control 100 shares of stock. If we're starting with a model $10,000 portfolio, we'd say never put more than 10% of your capital in any one trade. That'd be about $1,000, or it would get you 2 contracts on a $5 option. Like I said before, we like our stops around minus 20%, our full targets at plus 40%. Sometimes it can be even better when we get a gap in our favor. Also, when we start making money, so say we get to a 20% gain, we'll put out an alert to tell you that you need to trail your stop up to break even or something in that neighborhood. So that way you're going to help manage your trades that are working to not let them slip away too much. Give them some room, but not too much room. And we'll give you a regular update with occasional alerts as needed during market hours. So we try to keep them outside of market hours to make it really, really simple. If you looked at our equity curve that I showed you earlier, basically you can see that it's been pretty strong with some really good surges and then some occasional little givebacks. Past performance doesn't guarantee future results. There's always risk in any trade. But the idea is that, if we're kind of spreading ourselves out steadily with our favorite bull and our favorite bear trade every week after the Monday close, getting ready for the rest of the week, then you can really take advantage of where the momentum is in the market in certain names to the upside and other names to the downside and keep yourself balanced that way. It creates a nice little hedge with our favorite call and favorite put trade of the week. So call us at 800 Big Trends if you have any questions about getting started with After Hours Trader. You can go to the bigtrends.com page, and you should see here a way that you can get started month to month to allow yourself the ability to start putting time on your side, trading when you want to after hours that night or in the morning if you're more of a morning person, and making sure that you're really positioned to take advantage of our favorite big trend names on the upside and the downside. Call us at 800 Big Trends. Drop us an email to clientcare@bigtrends.com. We'll look forward to having you join After Hours Trader and take advantage of this focused approach, but still with a regular activity on the upside and the downside every week. Thanks so much for watching. I'll see you soon. Trade well.